Hi and welcome back to Cheeky Crypto. Today guys, we're going to be taking a look at Cardano, specifically the price action of ADA. We've also seen a little bit of volatility with Cardano, so we want to kind of talk about what is potentially going to happen next here with ADA. As we get into this video, if you find it useful and informative, hit that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with all the videos that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, why not check it out? It's a fantastic community down there, talking crypto 24/7. Right, with all of that said, done and out of the way, let's jump on down into the desktop, take a look at what is going on here with Cardano and what I think is likely to happen next. Okay, so we're going to start things off just with our hourly chart, guys. We're going to talk about, what's been going on just here. So as you can see, we had this ABC move to the downside, and we actually break this down in lots of different kind of ways. We can actually dissect it into subsections. Okay, so this is obviously the hourly chart. So it obviously means that there's a lot of things going on here, and we should probably potentially be aware of them. Now, you can count this in however you kind of want. You could argue that this actual wave here is a wave A, that's a wave B, and this is an impulsive move to the downside. Therefore, this is wave 4 and this is wave 5. It's very possible, and that logic actually works, and you could carry on with that without any issue. You can move this down, and you can see it went past the 1.382 before mushing up into a fourth wave, right? So for argument's sake, I'm just going to draw this up as a 1, 2, 3, 4, 5 move. But again, you could quite easily do this as an ABC. I just think the 1 through 5 fits it slightly better. Now here we obviously have a push to the upside. This one I'm going to leave as an ABC because we have a definitive A, B, C move. And inside the C move, you can also see there's an ABC. I'm not going to go into too much of the waves within waves nonsense, but it can get quite complicated depending on how much you want to dissect and go into that rabbit hole, really. But ultimately, what I'm going to do is I'm going to just move this over and make sure that we get this as close as I can to where those wicks are. So here we can see that actually, we've overwicked it a little bit. 120 was the 1-to-1 ratio with the A wave. We actually pushed this up a little bit to 121.5, but not enough to actually have an impulsive move to the upside. And we can also see that here that there is some kind of corrective action here. And you're looking at this as an A, B, and an overextended C wave. I think that's kind of what you're looking at here. And this one technically, I think, probably crosses that threshold of an impulsive move. And we can check that as well. We'll have to take it from the high of the C. And if we do that, yeah, we kind of have this ticked off. But nonetheless, we actually crossed over this A wave high. So we know it's not actually an impulsive move, but it does cross that threshold. I'll tidy this up as I go. So from here, we obviously have an interesting move up, a really small A and a B, and then another overextended C wave. This seems to be a bit of a common pattern right now with extreme volatility. I think there's a lot of things going on here that are either wiping out positions in terms of stop losses, leveraged, etc., or some extreme FOMO at times, but the volumes, they spike up rapidly and you get wiped out very quickly. So I think this is more to do with the market makers than retail investors at this stage. So we've seen that needle move dramatically and the volume comes in specifically for it. Now here we can see there's an a definitive A wave down, a B wave up, and a C wave down lower. There's nothing overly special about this one. We have an A, we have a B, and we have a C. You could argue again that's an overextended C wave, which it is, and we'll just go ahead and move that over. But again, nothing special in the sense that it hasn't gone past the 1.382 and hasn't come anywhere near that 1.618. So again, we know that that's an okay move, and we can kind of measure that out. Now, obviously, the ABC down means that we're on an ABC up. And the interesting thing about Cardano here is that we have the A wave, and again, you can count those sub waves if you want. We have a B wave down, and that C wave should actually be up here, right towards this 118, I think, that resistance. Let's just quickly do a check on that. We'll take it from the top of A to the bottom of A. And then we'll just transpose it over here. Yeah, we're coming at about 118.6. So what you're actually seeing here is we should go up here for the 1-to-1 ratio. However, and this is a big however, we found major resistance right up here. This has basically created a double top. Now you couple this with our stochastic RSI, we have a double top bearish flag that is basically telling us that we're likely to go ahead and pull back down, and we've got to wipe out their stochastic RSI. So we obviously have this as a potential move that still could come in, $1.18.4 before we start to see an ABC down. Or alternatively, we actually have this kind of capped out right now, just up here at the top, or creating a double top. And effectively what that's going to do is it's going to bring in an ABC move. And we could argue that we're actually starting the A wave down, and this could actually break. Now, for this to kind of be confirmed, we want to do a couple of things. We want to first of all see it drop down lower than our B wave. That would effectively be 114.1, and then we definitely want to see it go below the origin of A, and that will confirm the move. Now the other thing here is I could have, and I'll admit it, I could also have these waves incorrect, right? And I could be drawing wrong conclusions. And what we could actually be looking at, if I tidy this up a little bit, just to play devil's advocate here, we could also say that this is an entire A wave, this is a B wave, and then we go down lower. Either way, it's looking like we're having a pullback, and the stochastic RSI is also confirming that, right? So there's lots of different ways we can kind of look at it, but it all depends on your originating start position. Mine, which is obviously up here, which obviously then relies on everything being down here, correct? But this is a definitive top, so we can obviously acknowledge that there are 5 waves here. This should be a pretty clear, A, B, C move to the upside afterwards, and that is normally then kind of followed with some kind of impulsive move after an impulsive move like this. But we actually have choppy corrective moves. So this is actually quite encouraging because it shows that we are actually looking pretty reasonable on the charts. There's nothing to be overly too concerned with, and Cardano is just correcting, and this is actually good for ADA because it basically means it's short term. It isn't a long term trend setting move to the downside. It's not impulsive down overall, right? These are micro movements, and we're actually seeing a lot of corrective micro movements, which is actually really good for Cardano. So overall, that's not too bad. But we obviously can acknowledge that we are looking for a bit of a pullback to the downside. Now, let's hypothetically go with the worst case scenario and assume that this entire wave here is an A wave, okay? And then this is our B, which is coming in at that double top, and then we're going to see that C wave lower. Now, in this particular scenario, what we'll do is we'll take the measurement of our A wave, we'll transpose it over to this 116.4 cap that we've had, and then we can see that we have a probability of Cardano coming down to about $1.06. 0.6 cent. Okay, so 1066. So that's going to be the most probable area, but of course we have to acknowledge that there's some interesting areas of support on this journey. 109 and 0.9. Okay, this is a double bottom, effectively then took us up into that 5th wave. That's going to be a strong area of support for us. It was previously an area of resistance as well on more than one occasion. So we want to be very cautious of this and obviously acknowledge what the patterns are looking like as well. So this is going to be a major area of support. This actually comes down to that one, the 618, the 702 and the 786, right? So it's right in that sweet spot. Obviously coming back down, we have the 107. Again, this is another area of previous resistance that could be turned into support. So should we actually lose this support, then obviously we're going to go shorter down towards the 107. Other than that, there's hopium that we come all the way down towards $1, but realistically, do I think that's probable? Not right now. There's no data to suggest such a significant pullback like that. The data is suggesting a pullback, the 109.9, the 107. That seems to be the most probable area, and something that we really should be considering. But going down as low as $1, I do not see it, not just yet. We would have to see maybe another kind of ABC, of a small kind of ABC, before we would then start to see maybe a bigger one pulling us down towards that $1 level. But I mean, it is possible, but we aren't there yet, so we'll discuss that closer to the time. But for now, we should acknowledge that there is a pullback that is due here on the hourly chart. And we have found some pretty interesting resistance here that could lead us into these lower ranges. Now, what we're going to do is we're going to build this up into our 4-hourly, right? So obviously the hourly chart is overbought, right? And it's looking for a pullback. But the hourly chart, the 4-hourly chart here, is oversold. So again, this is actually indicating that we should see a spike to the upside. So this is where the volatility is really coming in here. And the data is not overly clear to be certain on what direction it's likely to go. So the wave counts are really helping us identify the direction of the move, which is obviously down. And the smaller micro movement on the hourly is also indicating it. So we'll have to watch out for that. If that gets wiped out very quickly, we could see this thing actually move up rather than down as per the wave counts. So we need to be very cautious on that one. And the other thing that is really encouraging here is that basically during the pullback here, that A wave that I have it marked, we saw a significant volume of selling. Okay, and on the way up, we actually saw the volume decrease, right? The volume decreased on the way up. So therefore, we know that there are more active sellers, or the sentiment is to sell rather than to buy, according to the volumes that are being pushed through right now. Okay, so we take the volume, we take the stochastic RSI, we take the wave counts, and we take these support and resistance lines, and we kind of draw a conclusion here that there's a high probability that we are going to be pulling back down, as the sellers seem to have control at the moment. And like I said before, as we zoom out on this, this is a very healthy correction. This is nothing to be concerned with. So as we come up into our 8 hourly, we have a very similar story, but this time we have to acknowledge that we've only just gone into this oversold area on the 4 hourly chart. This means that this is a short-term correction, and we should potentially start to see the stochastic RSI rise on the 4 hourly and the 8 hourly, potentially after this particular correction. Now, when I say it's only just come down here, we can see that we've been down here before, and of course, we can be down here for quite some time. So let's bear in mind this could take a couple of days, and it's perfectly normal to have this stochastic RSI down there for a significant period. With that being said, we should also acknowledge the slightly larger view, which is the daily chart. Now, the daily chart is heavily overbought, just like our hourly. This is indicating that we are going to be looking for a significant pullback. It isn't going to be necessarily pretty, but it is corrective, okay? So after everything that we've seen so far, this is a very corrective move, and I would like to think that moving down in towards this $1.07, not sure I'm going to say $1, I don't think that's going to happen, but $1.07, and that should potentially see us wipe this stochastic RSI down much lower. That would allow us then to correct our hourly, correct our daily, get them aligned with what the 4 hourly and the 8 hourly are telling us, which then marries up very nicely with an oversold stochastic RSI on our weekly chart. Altogether, this is basically now telling us that we are looking for significant push to the upside, where potentially Cardano will be looking at new all-time highs just north of where we have been previously. So overall, we have a lot of data here, from everything micro movements that we've been talking about on the hourly chart all the way through to the 4 hourly, 8 hourly, and of course daily chart. Ultimately, we are talking about a pullback that is quite natural and very, very healthy, and I think this is going to put us into a position where we start to actually see a lot of accumulation ahead of a big surge to the upside. Now, of course, we have to analyze what happens at the end of this correction. Has that daily chart actually corrected enough, or does it actually require more? There's a particular pattern that is playing out on these charts that does actually have me quite concerned. It isn't something that is natural by any stretch of the imagination either. So what I am going to do is I'm going to jump us down into the charts. I'm just going to quickly talk about this because it's a possibility, and we really need to be very cautious over it. And it's very obvious on the Bitcoin chart. So when we actually take a look at Bitcoin here, there's a particular pattern that plays out occasionally. Basically, you have kind of a sideways move, you move up, you have a sideways move, and then you move up, you come across, and then you repeat this pattern to the downside. Okay, this is a pattern that has been tagged quite heavily with market makers, pushing the price in a direction that they want, and obviously pushing the price back down afterwards, liquidating people, taking out all the stop losses, etc. So we are cautious that Bitcoin has this pattern playing out, and when it comes to Cardano, if Bitcoin pulls back, there's a high probability that many altcoins, including Cardano, will also pull back. Okay, so although I'm talking about, this pullback to 107 being incredibly healthy, what we don't necessarily want to see is a pullback all the way down here to $1, which wouldn't necessarily be the healthiest move, but it would still mean that we are progressing up to new all-time highs afterwards, because it is not a natural pullback, it's an artificial one from market makers, if that is what is actually going on there. So it could be a coincidence that the pattern plays out, it could not be. I'll leave that for you guys to decide, but I do want to kind of make sure that everyone is aware of these particular things as they crop up. So guys, I'm going to leave that there. If you have found this video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then go ahead and subscribe, tap the bell, select all notifications, and you will be kept up to date with everything that we do here at Cheeky Crypto. With that said, done and out of the way, I hope you all have a fantastic day, and I'll catch you all in the next one.